It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. And with rate hikes all over the place, a lot of volatility in bond markets, in equity markets, and in all other markets as well. And the Fed hiked rates by 50 basis points yesterday, and they are indicated another 50 basis points rate hike in June. The markets are a little worried about the Fed trying again panicking on inflation and raising rates by 75 basis points, but they have not done so. But the worry is that the Fed, ECB, and even the RBI are way behind the inflation, the way inflation is shooting up. And if they're not able to control it, then they may not able to control it at all. And it could open a lot of instability across economies and financial markets. In all this, bond yields have gone up sharply. 10-year gsec yield has gone to 7.4%, again multi-year highs. Then US Treasury yield at 2.92%. And the Bharat Bond ETF, which has found a lot of flavor with investors. It's an index of PSU bonds to all the way to play. The safest of the ETF yield has gone up to 7.32% for the 10-year ETF. This bond was issued just about a few months back at around 86.85%. So it has gone up sharply. And the questions investors will ask, financial advisors will ask, is it time to position portfolios for longer maturity assets like Bharat Bond ETF at 7.6%? So put it in perspective, 10-year gsec yield at 7.4%. So does it make sense to just pay 20 basis points more for an ETF? And also the second is state development loans again will be around the higher than 7.3% in the next auction coming up. And also one should wonder about the rate hikes that are coming up. So the question is always that whether the yields are factored in many more rate hikes or there's still a long way to go. Depends. And the best place to answer your questions is our webinar at 11 a.m. tomorrow morning, the 6th of May, where we are talking about inflation, Fed rate hikes, RBI rate hikes, and all others, and how to position for income investments. This is very important for financial advisors and investors who are able to take their own investment decision in fixed income. And please do attend the webinar. The registration link is given in the description here. And it was since the rate hike was extremely, it came as a surprise to the markets. So we have INR bonds as always is on top and conducting such webinars. And also I'm talking in Twitter Spaces today at 8 p.m. This is on MLDs, but I will also cover the topics of the Fed and RBI rate hikes. And MLDs have seen a lot of traction in the last couple of years, especially in the last year. And it's gained a lot of investor interest at all levels due to various reasons. And it's creating an whole market by itself. And so it is very important to understand the MLD market. And so join in at Twitter Spaces at my handle, Arjun Pansarati, or INR Bonds, and join the discussion at 8 p.m. today. It is Thursday, the 5th of May. Do not forget to download our app, Quick Invest by INR Bonds, where we have showcased the best bonds in a rising interest rate and inflationary scenario. And investors who have been investing through our app in bonds have really benefited by selecting the best bonds, giving the most information on the bonds. They have been, in their mind, they have been pretty much confident the bonds they have been investing in because of the information and our own proprietary risk score that we provide, and all the transparency required for, and the easiest in-app settled investment process and settlement process. So do download the Invest by INR Bonds app. And thank you for listening in. Do not forget to subscribe to your YouTube channel if you're not done so already.